first time home buying 101. And this is to let you guys know, I came up with a lot of questions that I just personally had. And when I presented them to Berto, he was like, this is a good path to go down. So everybody who's at home, if you're watching this, if you have any questions with anything that we're talking about, jump in on the comments. We'd love to get things answered right away. And you guys might even spring up something that's, we can talk about. So the first one that as far as first time home buying, I figured the best thing to start off with is what kind of loans are out there, because you obviously understand a lot more about that than I don't even know. I've heard the terms of like FHA, but I know that there's so many other loans out there. So for the first time home buyer that is coming to you, how many different options do they have for loans?
Loans actually, you start in two flavors, conventional and government. A government loan it's not from government. FHA, VA are government loans, and those are loan program options. And it just means they're insured by the government, but a bank still makes that loan for you. It's just that when they go to insure the loan, which all loans are insured, we can get to that later. When they go to insure the loan, they just go to the government to insure it, either FHA or VA. And then conventional is just a loan that's not insured it's insured by a private entity, meaning not a government entity. You might have heard the term Fannie Mae and Freddie Mac.
Yes.
Those are big insurers and purchasers of conventional loans. And one is not better than the other. There are pros and cons depending on your particular situation. That's where I come in to help you say, well, because you're a veteran, you could get a VA loan and do zero down. You don't need any down payment. The VA will finance 100% of the price of the house for you. That might be good for you if you don't have cash, but you need to be a veteran or be married to a veteran.
Actually, this brings up a good question. My sister has a question here on YouTube. She says, do you have to be married to get a VA loan with your partner?
That you don't have to be. If your partner is a veteran, you can get a loan with them. That does require what's called prior approval from VA. So we do actually have to go to, because when we're doing a VA loan or an FHA loan, the loans don't have to be approved by them. We approve the loan. Again, we approve it and make the loan for you. But when you're doing a loan to a borrower, on a VA loan to a borrower that's not married to the veteran, that does require prior approval from VA, and they usually approve those, but it just takes a little extra time. Okay. So the short answer is no, you don't have to be married.
Okay, so some extra work, but it's okay.
That's a good question.
Okay, so there are multiple different loans, and the difference between like the FHA, VA, and the other ones are conventional. Non-conventional. So some are insured by the government, and some are insured through
by non-government agencies.
By non-government.
Yeah.
Okay.
And you go ahead.
I was going to say, and so when someone is their first time home buying and they're coming in, they're going to tell you their whole situation, and you're going to be able to evaluate and kind of recommend what is the best route for them.
That's why a human loan officer is important. Still these days, even in the age of the internet, I mean, there's lots of online lenders where you just go on, click, and a lot of people like that. They don't, and there's no interaction with a human.
Yeah. I hate humans.
They're overrated. But, and you could do that. I'm not saying that that's not a good way to go, but if you have a professional and someone that you can trust, that's the important part.
Absolutely.
You got to be able to trust them. So you have a referral from a family member or friend who's used them, or, you're watching me now and you say to yourself, I trust that guy.
Yeah. I like your face. You've got a good face.
I like you. And, that they can steer you, not steer, that's the wrong word, where they can show you
Guide you.
options
Yeah.
and guide you and say, well, you could do it this way, but and if you really want to do that, we'll do it.
Yeah.
But this might be better for you. There's other options.
I enjoy talking with a real human. I know we
Yeah.
joked about it earlier, but I mean, I just went through some credit card fraud yesterday, and I
Oh
was on the
shit.
phone. Oh yeah, I'll tell you about it later. It's a long story, but it was rough because I was on the phone for about 4 hours talking with multiple different people in multiple different departments, and I
Mm-hmm.
had to explain myself every single time to a new person and this and that. And finally, I just
Yeah.
got off the phone and I went to a branch and I talked with a real human being and I said, "This is what's going on. Help me out," and got it done.
Yeah.
So it's much.
Yeah.
I think that when you're trying to pick which loan you need to get, it's probably better to talk with someone who knows what they're doing and knows your situation and can kind of let you know, hey, if you do this loan, you can do it, but this is what's going to happen, or you can go this one. This one's going to happen, but ultimately, it's up to them what they want to do.
Right. Exactly. And that's the purpose of a loan officer, a licensed professional, is to give you that education and that guidance, so you can pick, so you can make an educated decision.
Yeah. Okay.
Exactly.
All right. So moving out, once we pick the loan that we want to do, the next thing I was curious about was what credit score do I need to have? What and I think that this is probably the question that deters a lot of people because
Yeah.
let's face it, a lot of people, we're sitting on some debt, we're sitting on some credit scores. Some of us, trust me, I've had great credit and 6 months later it was crap because
Yeah.
it happens. But
Um.
like for a
Yeah.
rule
Yeah.
of thumb, what type of credit do we need to come in with?
Before I answer that, I want to answer a couple of questions that came out on public
Yeah,
comments.
let me
My
jump into
opinion
that.
on Purple or Rocket Mortgage, those online lenders.
Oh yeah,
Again,
okay. Let me jump up
I
onto this. Sean Murray, Sean, what's up, buddy? What's your opinion on Purple or Rocket Mortgage?
yeah. Again, those online lenders. I'm not saying they're not a good choice.
Mm-hmm.
But again, you're going to get little to no human interaction. You're going to have to make all your own decisions, and you may have done all your research and know exactly what you want, which is great. That's a good thing to do.
Mm-hmm.
But again, you haven't been in the mortgage business for 10, 20, 30 years.
Yeah.
And you could be missing something.
Okay.
I'm not saying they'll rip you off. I'm just saying you're not going to get the
human interaction.
the guidance that could help you, that much more.
Okay.
And Bruce,
Are Purple real quick? Are Purple and Rocket Mortgage those are online lenders?
Rocket Mortgage is online. Purple, actually, I'm not even that familiar with. I'm assuming that's another online lender.
Okay, so those would be like places that you can go and just do everything online, do everything yourself, not have to deal with anybody. And okay, all right. And then my pop's dad up in Utah, do they have to be registered in the state where the property is?
I assume you're meaning Bruce, the loan officer, and the answer is yes. Because licenses are by state, but the company I work for, New American Funding, we lend in almost all the 50 states. We're just not in New York and Hawaii. So I can help you with a home loan in any of the rest of those states because my company is licensed in those states.
Okay. So you don't personally have to be licensed, but as long as you're working for the company and the company is licensed.
Exactly. Well, what happens is we do get a person involved that is licensed in that state.
Mm-hmm.
We reach out to that an office in that state, and we say, hey, we got a loan in that state. Let's work it together, and that's how we do that.
Okay, perfect. And then Neff, love you, Neff. She has a question here. Are there any programs for single moms working to qualify for a home?
There aren't any programs specifically for single parents raising children.
Mm-hmm.
Unfortunately, that's a good idea.
Mm-hmm.
But there are programs that help first-time home buyers. Of course, we're talking about that, and people in specific professions like teachers or police
Okay.
those professions, but not technically not single moms.
Hmm.
People, single parents raising kids. There's no program for that, but I think there should be.
Yeah, absolutely.
Uh,
There should be.
let,
Here's
let,
a
let's, oh, sorry. Go ahead.
Yeah. So I love the interaction, everybody. Thank you so much for jumping in with the questions. We have another question here from Michael, and I'm getting a phone call. I am gonna turn that off. Um, as a first time home buyer or second time home buyer, would you recommend a hard money loan to fix it up, and then get a conventional loan?
I assume you're talking about a hard money loan. Hard money loan, by the way, is a high interest temporary loan.
Okay.
Uh, it's it's basically, we don't care. Well, they care a little bit, but they don't. They don't
We care a
dive
little
into,
bit.
do you really qualify, because it's really based on the equity of the house. Um, but it's high interest and it's meant to be temporary.
Hmm.
And I assume you're talking about buying the house, fixing it up, and then replacing that hard money loan with a conventional loan. You can do that, but there are options to get a conventional loan to fix a house, and it's your permanent financing already. So you don't have to go through the step of the hard money loan, paying those fees, paying that interest for all that amount of time. You get a regular conventional loan at a good interest rate, at decent amount of cost, and
Hmm.
and that's your permanent loan. But it has enough money in there to fix the house, whatever it needs
So there
to.
is so what he's talking about is going through a like getting a bigger loan to fix everything up, and then so those are like extra steps.
Yeah, again, it depends. It depends on the person and their situation.
Hmm.
That's something I would look at and say, okay, yeah. I mean, in your situation, that maybe your only option is get a hard money loan right now,
Yeah,
buy the house, fix it up, and then
and
replace
then
it
go to
with a,
conventional.
conventional loan, refinance that hard money loan.
Okay.
But again, I could offer a option where, well, here's this one loan that you're buying the house for $200,000, but it needs $50,000 worth of work. So we lend you $250,000 to buy the
Hmm.
house and do the work, and it's your permanent loan. You don't have to change it.
Okay. Oh, that's
So
interesting.
yeah.
Awesome. Okay. All right. Let's. That's. Did we just get another one? No, we
No,
didn't.
I think that
Okay.
was it. We're back to credit scores, I think.
Yeah, let's go back to credit score. So what credit score do I need to come in with? And this is like I was saying earlier, I think that this is something that deters a lot of people because we've had good credit scores, we've had bad. And I think a lot of people, myself included, have been at times where I'm like, I don't even want to go down that road because I can't even afford it, you know? So what kind of credit score do people need to come in with?
Conventional will go down to 620, and that's a
620?
620, and that's a not really that good of credit score.
No,
Um,
I love it. That's
and
really good news for me.
and FHA will actually go down to 580, and that's a damn
Wait a minute.
bad.
You're saying that I can hold on. You're saying that I can have a 580 score and I can still approve for a home loan?
Yes.
Now, obviously,
That,
it's going to be like a credit card interest rate, right? It's going to be like
no,
23.999%.
no, it'll be higher. I mean, everyone's everyone's seeing 2.75, 3% right now.
Yeah.
Uh, you know, uh, but you might end up like at 4.5%,
Okay.
which is still a good interest rate if you look at rates if you look at historically, you know, five
And is that
years
something
ago.
that you can is that something that you can refinance as well? When you like let's say
Absolutely.
your credit score gets better.
Absolutely. You can always hardly any of the loans. Actually, I haven't done a loan with a prepayment penalty in has to be at least before the crash, since before the crash.
Mhm.
So 15 years at least. Uh, they just don't exist anymore because the feds pretty much got rid of the prepayment penalty because they didn't want people paying those anymore.
Mhm.
That's part of that was one part of the problem that led to the crash back in '08. Um, and so there's no restrictions on refinancing any loan that you're going to get from me.
Okay. And then so with Oh my gosh, hold on. My dad's got to jump in on this. My dad, Bruce Petrell, says,
Yeah,
"Wow, my first house, the loan was at
yeah.
15.8%."
That's what I'm talking about. People, 5 years ago, I was telling people, "Oh, your rate's going to be 5%," and they're like, "That's way too high. You're crazy." But I'm like, we were doing loans in the early '90s at 11 or 12%, and people were happy. So you got to think of it as a historically, and but still, if you can get a really good rate,
Mhm.
great, get it.
Well,
Two
since we're
percent,
talking about
3%.
rates real quick, let me jump into this one. Justin has a question. He says, as a first-time home buyer with interest rates so low and housing prices so high, is it worth buying a home now if the value of the home is inflated? That's a good question.
Well, the question really is, are home values, are they actually inflated?
Hmm.
Uh, you know, uh, I think people are sitting around waiting for another crash like '08,
Hmm.
and
Yeah.
but from what I'm seeing, that's not going to happen
Hmm.
because the loan programs that led to that aren't around anymore, or some of them are, but the qualifications are so hard that you have to qualify for a regular 30-year fixed rate loan, which
Hmm.
has a higher payment than one of these pick a pay loans where you are paying a small minimum payment. Um, you have to qualify for the big payment to get the little payment. So,
Hmm.
so even if uh, uh, just to be sure that they'll never default on it. So those programs aren't around anymore, and no one's doing them. And so our home value is inflated right now. It sure feels like it.
Yeah,
Um,
it
but
does.
if we have a dip in pricing, home pricing, I think it's not going to be no $100,000 like people are wanting, or maybe some
Hmm.
people are expecting. I think these prices are here to stay,
Yeah.
and we might get a little dip, 10% maybe, and that's I think
So,
I'm a little
so
bit.
even if we, so yes, the prices do feel inflated, but you're saying that, I mean, the interest rates are so good right now. Um, I guess, would it be better to wait for it to dip? Maybe not. Maybe just get in at a good price at a good
It's
interest
no
rate.
the mantra in real estate is it's always a good time to buy a house.
Yeah.
When is a good time to buy a house? Right now.
Yesterday.
Yeah, because it's the only investment that's going to pay you back uh, the amount that it does pay you back between paying down of the principal and appreciation of the house. Even if the value dips over time, it's like
Hmm.
the stock market does that. If you're in stocks and you're making a lot of money, you're gonna see dips in the stock market, and you're gonna lose part of your portfolio.
Hmm.
But it's
Yeah.
gonna come back, and you're gonna make it back somewhere else. So
Okay.
um, you know,
Okay.
the
Here's
house
a
house is always a good investment. Is the point.
And then here's another one from Michael. Uh, can you use a 401k or IRA as a down payment to get into a loan?
Yes, you can. You just have to talk to whoever administers that retirement account for you. So you can ask them what are the terms of how can you withdraw and how much can you get? Because usually you can't get the whole thing,
Hmm.
um, and usually you can borrow against it. And if you just make a payment to yourself,
Yeah.
you're loaning yourself your own money, and you make payments until it's all paid back, or you can do a hardship withdrawal. But
Is that
there's
something that you can take care of? Like if I come to no, it's not something you can do.
No, it's not. That's something because you have to deal with that again, like that 401k administrator,
Hmm.
whoever it is. What's one of them? Franklin Funds or I'm forgetting the names,
I
but
don't know.
you have to contact them and say, okay, I need some of my 401k
I'm a
money.
musician, bro. I don't have
Yeah.
a 401k. My 401k is cash.
I got $401.
I got yeah, I got not even that after 2020. I get.
So you have to talk to them, and they'll tell you what your options are to get money out of there to use as a down payment for your house. And but that
Okay.
can be used. We do allow that. I do that all the time.
Okay. So back to credit scores real quick. So you said 580 is like the minimum to jump into. Now, if I jump in with a 580, what am I looking at as far as my interest rate? Am I looking at like 15%? Like,
No, no, no. Like I said, you're gonna change buds here. You're gonna, where people, like I said, are hearing, 2.75%, 3%. If you
mhm.
have a good credit score, you might end up at 4%, which is still a good rate. But what that means is you're going to qualify for less house because the payment's going to be higher. So
Okay.
it's going to be harder to qualify for that payment because the rate's
And in
higher.
order to get the best rate possible, what credit score do I need to come in with?
Um, by the time you hit 740, after 740, it's all the same number.
Okay.
So
So
because
anything
there's
after
no more,
740, you're topped out.
yeah, there's no more discounts at 800. It's
Well, okay.
people want that 800 score, but
That's
in
crazy. People come in with
home
800. What's the highest credit score you've ever seen?
it was eight something. I think it was 830 something. Yeah,
What?
yeah.
How does that
But
even
again,
happen?
well, I can, part of the services I offer is helping you with your credit if you need it.
Mhm.
I'm not a credit repair guy, and I don't recommend any of those credit repair
I
agencies
like
out
how you
there.
said that with conviction. I'm not a
Yeah.
credit repair guy.
Um, but no, because there are probably people out there that have used those companies, and they're just, a lot of them just take money and don't do anything.
Yeah.
I can give you real world advice on how to get your credit better, uh, and uh, that I've seen work. And people have come back to me and says that totally worked. My credit score was 620, now it's over 700.
Wow.
Um,
Wow. Okay.
and I don't have any secrets. I just know how credit scores look at your credit and
And
what they
how to
want to see.
contact who and say what, right?
Exactly, exactly.
So
And
I'm glad that my sister jumped on right now, Shivani. She's a loan officer up in Utah. She's been doing loans, I think, now for 10 years. Am I wrong, Shivani? She saw someone up there, 837. It was an old dude who wore New Balance shoes.
that's
I
good.
love it. I love it. And
Um,
here we have Francis.
Hi, Francis.
How are you?
That's
Hello,
my
Steve B
sister.
would like to know if you refinanced 1 year ago and have strong credit score with 40% equity, can you get a second this soon after the refinance?
Absolutely, yes.
Really?
Um, yeah, there is no what's called seasoning requirement to get a
Hmm.
second. It's all about the equity that you have.
Hmm.
So if you have
Okay.
enough equity, any bank will give you and get a strong credit score, and you'll need to prove income as well.
Yeah.
But just about any bank will give you
This
a
is like a
credit line.
perfect puzzle. I mean, there's so many things that all kind of have to happen all at the same time, you know?
Yeah, pretty much. Um, Pretty much. Yeah, yeah, but that's the importance of uh, uh, you know keep getting your finances in line.
Hmm.
Getting your credit score in line. Making sure your all your payments are made on time. I know people get into trouble. That happens, but
Berto, where have you been
where
all
you
my
been all my
life?
life? Right here.
Oh, that's beautiful. All right. So pretty much we established that 580 you can jump in.
Yeah.
And
Of course,
is that only with one loan or with all loans?
that's FHA 580.
FHA. And
Yeah.
then at 740 you pretty much topped out. So ladies and
Yeah.
gentlemen at home, if you can get to 740, you have made it to the promised land. And let's jump into the next one, which is how much debt can I have? Because I think
Um,
I know a lot of people that carry around a lot of debt, but still have a great credit score because they make their payments on time and they do their
Sure,
stuff. So how
but
much debt can I have in order to get into loan? I know it probably has a massive effect on how much loan I can approve for, right?
it does. Of course, the more money you make, the more houses you qualify for, and the more debt you can handle. But the thing to remember is that for every dollar of debt that you have, if you credit cards, car loans,
Mm-hmm.
for every dollar, you have to make uh, like $3 in income to cover that debt before you qualify for a payment.
Oh.
So if you have $1 a month in debt, you have to be making $3 a month, earning $3 a month, and then after that you need to make another $1 or $2 a month to help you qualify for the home loan, because the $3 just goes to pay the $1 debt. So that's kind of rough.
Oh.
But so how much the comes down to how much debt can you have? It depends how much money you make, but it's always best to have the least debt as possible when you want to buy a house.
Okay. I have to throw this up because my good friend, Mr. Jim Wooten from the podcast World According to Woot, and he's a fantastic musician and bass player. He poses a very good question. Hey, Berto, can a bass player buy a home even if he can only play one note at a time?
No.
It would be even better if he said pay one note because I got my car note or my house note. Either one, I can only do one. So, Jim, love you. Thank you for tuning in. Appreciate you
Yeah.
being here. Um, so,
How much debt?
so
As little as possible. I mean, yeah, some debt helps you with your credit score. You have to have debt to have a good credit score. That's
yeah.
something a lot of people don't understand. Actually, you actually have to have debt to have a good credit score, because because if you're paying on a debt, your score is seeing that. If you pay off all your debts, feels good, but it's not that great for your credit score.
Mm-hmm. Oh, here's a quick question, and this is just off the top of my head. I've heard a few people say that it's good to carry around a balance, but a balance of 30% or less. Does that ring any bells? Like with
Yeah. The best balance on any credit card is 30% of the limit of that card. So if you have a
Mhm.
card with a $300 limit, you want to have a $100 balance. Your credit score loves that, and don't pay it off. Pay the minimum payment. If you need to raise your score, that I'm really generalizing here. So
Okay.
don't go out and try this and say it didn't work.
I'm just going to pay the minimum for.
Yeah. You want to, if you want real world advice on your credit that applies to you personally, you want to call me or contact me,
Okay.
and I can tell you, and I'd have to run your credit just so I can see, okay, this is what you want to do, your personal situation, to get your credit score higher. But that said, your credit score loves your credit card at 30% of its limit. Make the minimum payment, and over 6 to 10 to 12 months, you're going to see your credit score go up because it sees you're making a payment on time over time.
Just don't miss one payment, because if you miss one payment,
And of course, yes, of course, all
isn't
your
it like
payments
one
have
of
to be
those
on time.
like 1 30-day late is like, well, just like fuck you.
Not necessarily. I mean, it's not a good thing,
Yeah.
but you know, I've done home loans for people with multiple 30-day lates on the credit report.
Excellent. Then we need to
Just
talk.
not on your mortgage. If you have a mortgage, never miss a mortgage payment.
Oh,
That'll fuck
okay.
you up. Yeah.
Okay. Here's an interesting question, which I'm not familiar with this whatsoever, but I'm sure you are. Do I need to find a title company, or does the mortgage company provide that one?
If you're refinancing, the mortgage company will provide a title company. If you are purchasing, the seller picks the title company. So either way, it's provided for you.
Wow. Wait, say that one more time. If you're
If
refinancing,
you're refinancing your home, me as a lender, the lender will provide the title company for you
Mhm.
on a refinance. If you are buying a home, the seller of the house will
Mhm.
provide the title company.
Can you request your own if you want?
If you're buying a house, you can try that.
Best of luck.
Yeah, the seller may look at it and go, well, why do they want that? I'll take this other offer.
Hmm.
Uh, on a refinance, yes, you can. If you could say, I like such and such title company, can you use them? And I'll say, yeah, I can use them, but I have a relationship with this title company, so it's going to
Hmm.
be easier for me to close your deal if you let me use mine.
Okay.
But I will use yours if you want.
Okay. Awesome. All right. Let's jump into the next one, which is how much income do I need to show? Um, this this has always been a difficult one, especially for entrepreneurs, musicians.
Yeah.
It's been rough because I remember years ago I wanted to buy a house, and they said, "Well, you have to show that you make income, but as a 1099 employee, as a contractor, self-employed, we make our money, and then we have our write-offs. So, and that's what we do our taxes off of. So
Mhm.
the hardest part is that we write off all this all this stuff, and so what we pay taxes on is not a whole lot. But when we go to do our tax, when we go to get a loan, they say, well, you have to prove that you make this money. I'm like, well, look, I make it. And they're like, no, you don't, because you wrote everything off. So it's
Right.
like a catch 22 where you have to bite the bullet and pay the taxes. So like, how much money do you actually have to, how much income do you need to show in order to prove for
Well,
uh,
again, it depends on how much house you want to buy. Well, the price of the house and
mhm.
the amount of the loan you're going to get, how much money you're going to put down. So
Okay.
that determines the loan amount. Because if you're buying a house for three hundred
What's the
thousand,
average, like, because you've been doing loans forever and you do loans every single day. So, I mean, the average home that comes in here in LA area, Southern California. I mean, we looking at 200,000? Are we looking at 400,000? Are we looking at 5% down? Are we looking at 20% down? What would be a decent average that you have noticed?
as far as down payment amount,
Oh, maybe like a correlation between both.
well, most people are putting down anywhere from 3 to 5%.
And for first time home buyers.
Yeah, well, actually, even second time.
Okay.
Um, uh, there's a little bit less of a percentage of people putting 10% down, and then you have the people that have a lot of cash and they're putting down 100 or 200,000, or they're selling their house and they're netting $400,000 from the sale of their house, and they're putting all that, or they're putting 300 down, saving 100. They're putting $300,000 down. So from the sale of their house into the new house.
Wow. Okay.
So there are some people doing that, but that's not the typical home buyer.
Hmm.
That's it's typically it's anywhere from 3 to 5%, and then some people putting down 10%.
And then with the how much income do I need to show? Let's just pick a number. Let's look at a $300,000 home. If we're
So
looking at a $300,000 home, how much income do I need to show? And I know that it also has to do with how much debt you're carrying as well, because that
exactly, you have to be able to afford the new house payments, including the
and the
taxes
debt.
and insurance, plus your
So
debt.
let's pretend that I have no debt.
Okay.
It's a good exercise. I like this.
So if you, I'll just cut to the chase here. If you buy a house for $300,000 and put down 5%,
Okay.
um, your that's zero. Um, and you don't have any debt.
Okay.
So actually, we'll see the difference here. If you don't have any debt,
Hmm.
that's not that much. You want to be making about $4,500 a month.
And the way that you can, okay, so you have to be making at least prove that you're making $4,500 a month
Yes,
in order to prove for a $300,000 home with no debt.
if you have no debt. Yeah.
Now, imagine that I'm carrying $15,000 in credit card debt.
Well, we got to translate that to payments.
Okay,
because
let's
we
say a
don't pay
monthly payment, a minimum monthly payment of $100 a month for the credit card.
for $15,000 worth of credit cards.
I don't know.
It'll be more
I'm
than
just
that.
coming up with. I just throwing numbers at you. I don't know. How about 660? I
uh,
don't know.
no, $15,000 worth of credit cards, you're going to have minimum payments of about $500 at least.
Really? Okay.
Um,
What
well,
if it's like three
let's do this.
credit cards that are 5,000 each?
Right. How much credit card debt do you have, Whit?
Oh gosh! Now we're getting real. Are we?
I'm not
Are we
asking.
getting real? Let's talk.
um,
Let's get
let's
real, mother.
let's let's do a typical scenario. Let's say
Yeah.
someone's got a $500 a month car loan,
Okay.
and they owe 5,000 $6,000 on credit cards, and that
Okay.
payment's like $100. So now you have $600 worth of debts.
Okay.
Or to buy that, where you needed to make $4,500 a month, now you need to make $5,500 a month to buy that same $300,000 house, because you have $600 worth of debt.
Oh, and that's
Now you have
you're
to
not
make a
talking about. You're not talking about the whole amount of debt. You're talking about the monthly amount of debt.
exactly. And there was a question, Siobhan asked that question. So it's not about how much you owe; it's about the minimum payment on those credit cards, what the monthly payments. That's what we use to qualify. What are the monthly payments?
Okay.
Yeah, and we don't.
That's
We
why
don't look
backing up. That's why it's so important to pay off as much debt as possible.
exactly, because then it's easier to qualify. You don't have to make as much money. So, and if you boil it down to a self-employed person like us, when you file your Schedule C, which is your business, if you're not incorporated, let's just say,
Yeah.
that's a whole other thing. You have your gross income, and you write off all your expenses, and you have a net amount, and that's what you get taxed on. So of course you want to write off as much as you can, so you pay at least the least amount of taxes. But that doesn't help you when you're going to qualify for a house, as a lot of people have found out. What do you mean? I made $100,000 last year. Yeah, but you wrote off 75, and your net income was only 25,000. That's what we look at.
Okay. So actually, this brings me into the next segment, which is how can I show my income? So you were talking about taxes. We're talking about, especially for someone who is an entrepreneur, someone who is a Schedule C person, 1099 subcontractor, but you also have W-2 income. So real quick, what are the best ways, and or not the best ways, but what are the ways that we can prove our income besides tax returns? Are there bank statements? Are there pay stubs? What's going on?
If you're again, we'll keep it in the self-employed realm. I mean,
Yeah.
when you have a regular job and you get a paycheck and a W-2, your income is usually pretty cut and dry. You get a base pay, and that's how much you make.
Yeah.
So, but for self-employed people, I just got lost. What was the question again?
Right. We can go down some rabbit holes on this one. So
Yeah.
I'm thinking that showing my income, proving my income. There's two different routes. I want to say there's three
Yes,
different
okay.
routes.
I remember. I remember now. So for a self-employed person, there are programs where you can say, well, you know what, my taxes really don't paint the picture of my real income. So we'll use 12-month bank statements. So we can see how much money you're depositing every month. But when you do that, you're not talking about 3 or 5 or 10% down. You need to put 20% down.
Oh, geez.
And your interest rate's going to be 5 or 6%.
So you can go off of bank statements, but you're going to have a higher interest rate, and you got to put a lot of money down.
Exactly. And I do those loans all the time too.
Really?
Yeah, because especially for corporate borrowers, they hide as much money as they can.
Right.
They're just,
the damn
legally,
snakes.
of course. So.
Well, here's the question.
Most people use the bank statements loan, so and they get it, and they have money, so they have the cash to put down.
Okay. All right. So if we don't, someone like me, someone who doesn't have the cash to put down, bank statements is probably not the best way to go.
No, because you would need to somehow put together a larger down payment.
All right. Well,
Again, like
how many more
300.
gigs are you ready to offer me with TLR?
Uh,
So okay, so we've got bank statements. We also have, W-2 income. What about someone who is a married couple, and one of the wife is W-2 and the husband is 1099? How does that combine? Can you combine that
no,
stuff?
absolutely. The W-2 person, we look at their income's what it is. There's base income, maybe there's some overtime and some
Hmm.
bonuses. We'll use that too. So we'll calculate whatever that is, and then we'll go look at the Schedule C for whoever's self-employed, and do that same calculation. Look at the net income,
Hmm.
and there's some stuff we can add back. Like a lot of times, there's what's called a depreciation deduction on your Schedule C on your self-employed schedule when you're self-employed,
Hmm.
and we can add that back. And sometimes that's a lot of money. Sometimes people do a $25,000 depreciation deduction, but
Really?
yeah. So if your net income is 25,000, but you had a $25,000 depreciation deduction,
You
now all
got
of a sudden your income's
50K.
50,000.
That's
Exactly.
awesome. Okay.
So there are some stuff we can add back. So
But
again,
that's also why it's so good to talk to a human. And
exactly. So if you hear, oh, you use the net income, someone looks at their schedule, feels like, oh man, I don't qualify, forget it. But
mhm,
when you're talking to me, I'm looking at it, goes, well, no, you look at, we can add all this stuff back, and
yeah.
now you qualify.
Okay.
Um, so
Okay.
there you
So
go.
let's move into because we talked a little bit about it. Let's talk into how much is a down payment. And I know we talked, you mentioned 3, 5, 10, 20. I know you can
Mhm.
put whatever you want, but are there requirements for certain loans?
Yeah, for conventional, you could put as little as 3%. That's 3% of the purchase price. FHA is 3.5. You're going to get a little bit better interest rate on the FHA, and possibly better mortgage insurance, which is different from homeowners insurance. I think we're going to get into that.
Yeah.
Um, and but So 3.5% for FHA. Those are the minimum requirements, and VA 0 down.
VA
So
zero down payment?
0%.
That's
The VA
awesome.
will, if you're a veteran, they will finance 100% of the price of the house for you.
Wow, that's beautiful.
That's
That's
for our
beautiful.
vets out there.
So for someone that's jumping into a regular FHA loan, they're looking at a minimum a minimum required of 3%,
3.5 for FHA,
three and a half
3%
percent.
for conventional.
Okay.
And the less down payment usually doesn't, it doesn't isn't usually better, typically better, or better just because it's less. Again, it depends on your situation. That's where I come in and say, well, you're going to get a lower down payment on the conventional side, but your payment's going to be higher because the mortgage insurance is more expensive on the conventional than it is on the
Hmm.
FHA. And
Well,
mortgage insurance for everyone out there is you have to pay mortgage insurance if you're putting less than 20% down.
so if you put less than 20% down, you have to pay the mortgage insurance until
There's a
when? Like for
monthly
the
mortgage
whole.
insurance. For FHA, it's for the life of the loan. For conventional, after 2 years, you can ask for it to be removed. Or you could always refinance.
Mhm.
If you get enough equity, you could always refinance. If all FHA loans have, even if you buy a house with, and we're getting a little bit in the rabbit hole, but even if you buy a house with an FHA loan and put 20% down, you're still going to pay mortgage insurance because that's part of an FHA loan. So if you buy a house with less than 20% down and you're paying mortgage insurance, you can always refinance that loan down the road when you have more equity, a 20% equity, refinance into a conventional loan with no mortgage insurance. Or again,
Wow.
after 2 years, you can ask for the mortgage insurance to be removed. That's
Wow.
conventional only. FHA is for life of the loan.
Unless you go FHA and then refinance.
Oh yeah, but you can, yeah,
You
even
can,
though
but
it's
the
life,
only way to refinance is if you have equity in the home.
exactly, and 20% equity, and a life of loan for FHA is a life of any loan is 30 years or when you pay it off.
Yeah.
So
So
there
if
you
I,
go.
so I mean, here's a hypothetical. If I buy a house with 3% down, I have to pay the insurance, um, and then 3 years down the road, the market goes incredible, and all of a sudden, I have 20% equity,
Hmm.
and then I can refinance at that moment and take the
Yeah,
insurance off.
exactly.
Hmm, that's really interesting. Okay, I like it.
Um,
uh,
absolutely.
here's a question from Richard. Can you get an FHA on just land, but intend to use as a business?
No, FHA only lands on real estate with a plot of land with a house on it, or
Mm-hmm.
units, up to 4 units. But so you can't the land loan, and
Mm-hmm.
those are out there, but those are no, you're going to pay a premium for that because a land loan is riskier than buying a house. So FHA won't lend you the loan for won't give you a loan to buy land, whether you're going to use it as a home or as a business. It doesn't matter.
Mm-hmm.
They just won't lend to you for land.
Mm-hmm. Okay. Excellent. All right. Let's keep moving along because we got a lot of stuff that we're still trying to cover. Like I said, ladies and gentlemen, we got a lot of different topics that we're trying to touch base on everything that we can right now. And I really, everybody at home, I hope you guys are enjoying this. I really am. I feel like I'm drinking a beer and learning something. So this is speaking of drinking beer. Here we go.
Yeah, let's go.
Mm. All right. Next one. What the fuck are closing costs, bro?
All right, closing costs. When um, when you buy or refinance a home, there
Hmm.
are at least four, at least four entities, and I'm probably going to think of a fifth involved. There's of course the lender.
Okay.
There is the escrow company. We're going to get into that. There's the title company. There and some people that may not be in California. Some other states don't have escrows. They're not escrow states, but still the title company is
Yes.
going to charge fees for those services. There's the appraiser who's going to go out and appraise a house. So every one of those entities that's involved charges money to give you their services. So those are the
Mhm.
closing costs. Um, an appraiser is going to charge about $500 to go and appraise the house, whether you're buying or refinancing. Um, escrow is going to charge you an escrow fee about $500 or $600 depending on the loan amount. They're going to charge a notary fee because that's where you go sign the loan docs, and they're going to notarize them for you. They're going to charge you. Uh, mm, they're going to charge a archive fee. They're just fees that they have. It's just to cover overhead because
Okay.
whenever they perform their service, there's a cost involved to them. So of course that gets passed on to you, and then you on top of that you pay for it. If somebody makes money, you got to pay for that service too. Um, so that's what closing costs are. It's the cost for each company that's involved in giving you the loan and closing the loan. It's the cost for each of those companies that they're going to charge you.
Do we have to pay for the valet and for the I don't know.
Yeah.
I'm trying to come up with all kinds of like I want to be a part of the closing costs. Like I think that while you're signing your docs, I could come in and play a song and I can be part of the closing costs.
I'll I'll add the bass player fee.
Yeah, I'll add bass player fee. And is it possible to have closing costs tacked onto the loan or
When you're refinancing, yes, you finance the cost, so you don't have to pay them out of your pocket. And it's people are like, well, I don't want to raise my loan amount. I want to borrow more than what I owe on the house right now because they just won't feel good about it. But if you really look at it, on a refinance, your closing costs are going to run about $3,000, maybe 3,500, and
Mhm.
you're talking about $20 a month in your payment, maybe
Yeah.
to finance those.
Wow. Might
So
as well just come up
I'd
with it.
rather keep $3,000 in my pocket and pay $20 more a month. That's me. If you feel differently, pay the closing costs. Pay the closing costs out of your pocket.
Now,
And
but you said that's only with refinancing.
yeah, on a purchase, you do have to pay the cost out of your pocket.
Okay.
So when you're buying, it's always your down payment plus your closing costs.
Okay. So when you're looking at a $300,000 home and you're looking at 3% down, 3.3% down plus closing costs, you're looking at what, like around 15K for
Well, let's see, my handy dandy calculator.
$9,000 to
Nine
put
thousand
down.
dollars. Yeah, exactly. So but then on top of the closing costs, you also have what are called prepaids, your taxes and your insurance that are due at closing.
What are you, the sheriff of Nottingham? Like, what else do you want to tax me for, bro?
Look at my bag, and you can just put the money in it. Uh, well, it's taxes. Taxes, you got to pay taxes, right? So when you buy a house or refinance a house, tax man is right there saying,
Yep.
I need my taxes. Your insurance premium, your homeowner insurance might be due if you're refinancing. It might be due like the month for closing, so you got to pay that. If you're buying a house, you got to pay the first year up front.
Mhm.
And
Oh gosh. Okay.
yeah,
So
so
there's a lot of factors that go into this.
exactly. So typically, I mean, for like you typically like a $300,000 house, you're going to end up at about $7,000 or $8,000 total with closing costs, and then all the insurance and taxes that are due at the closing.
Okay. My dad says
Yeah.
that Birdo needs a new DW kit.
Right. There is a DW fee on there. You will see that.
There's a DW fee along with the valet fee and the bass player fee. And we're also going to, because we're talking about it, there's a 5-foot Viking fee.
I know that people tend to think, wow, everyone's just got their hand out to get money from me when I'm doing this, but believe me, those fees are there. They're all there for a reason.
Yeah.
Because it's either a hard cost that we're paying, so we have to. We're not going to pay a cost because we're doing this to make money. This is what we do.
Yeah.
So we have to, any hard costs, we got to pass it on, and then obviously make money on top of that.
Yeah.
So but it can feel a little like a lot, but hey, you're buying a home, you're buying a we're lending you hundreds of thousands of dollars. It's not going to be cheap.
So my sister, she says, what's a rough estimate of closing costs? Now, I think that's very general, but if we're taking into the account of like coming in with 3% down on a $300,000 home with good credit, I mean, what's a guesstimation?
Well, like we said, of just closing costs, like I said, it's going to be like $3,000, $3,500. But then you got your taxes and insurance on top of that, which is going to be another $2,000 or $3,000.
Okay, so you're looking about like $5,000-$6,000.
Yeah, okay. On a $300,000 home, it'll be more as you go up on the price.
Here's a question right here from Neff. I heard that it is a possibility that the seller could pay the closing costs. Is that true?
Yeah, that is true. Sellers are getting so much for their homes now when they're selling them that there's a lot of cash that they're getting at the closing. But still, no matter what, they have to agree. You can ask for it. But I just did a deal where the seller said, we'll give you closing costs up to $10,000. And the closing costs were only like $7,000. So it covered all the costs. And they didn't have to, they just had to come in with their down payment. You always do have to come in with your down payment.
Yeah. Okay.
No one can give that. Well, you can get a gift from a family member for it, but you can't get that from the seller or the lender. The down payment has to be covered.
Oh, here's a good friend of ours. Steve Elo. What's up, buddy? Good to see you, man. Thanks for hanging out. Incredible musician, very good friend. And he writes, when I was able to buy a house, it was the largest stack of papers to sign that I had ever seen. Wish I could do it again. I can't imagine. What is the contract now? Like 9 pages, 12 pages?
More than
in quadruplet?
No, there's about, I want to say 40 separate
What?
documents you're going to sign. Yeah. Um,
Oh, I'm thinking about the purchase agreement.
the purchase agreement is like it's 10 pages.
Yeah.
But no, the closing documents there's 40 separate documents, and you know, you gotta thank lawyers for that, because every time
Yeah.
somebody gets sued, a new disclosure comes out.
Yeah.
And
Okay. Okay.
the point is, your hand will cramp when you're signing your closing documents.
All right. Well, let's jump into this is something that I'm very curious about. What is escrow?
What is escrow?
Yes. What is it,
Uh,
bro? Like I can't, when I first read it, I couldn't pronounce it. I was like, is it escrow? Is it escrow? Is it, and what does it do and why do we need it?
um, well,
It's like a
escrow.
30-day, everybody chill the fuck out period. Like what happens?
Well, there, escrow. The term escrow can be used for the uh, how do I say this? For when you're buying a house and you sign a contract with the seller, and you are what's called in escrow, meaning
Mhm.
meaning you're in contract, everyone's doing their job and getting all the paperwork ready, and then so you can close escrow. And we use the term escrow because there's an escrow company involved, and what the escrow company is but they act as a neutral third party. So when you go to, if you have the cash to buy the house and the seller has the deed to give you the house, no one wants to act first. The seller doesn't want to give the deed first because they want the money first, but the buyer doesn't want to give the money until they have the deed. So what happens is they take the deed and the money, they put it in escrow, and escrow does this. So the escrow
Why does it take so long? Shouldn't it be like one of those things like, listen, you got the deed, I got the money, and like me and you at the same time, like same time, motherfucker, same time.
Yeah, but that's the thing. No one trusts anybody. And actually, it's California law. You have to have an escrow company because.
So are so you're saying that there are states that don't have escrow?
Right, but those are called attorney states, and an actual attorney handles the closing, but they do the same thing. It's the money and the deed goes to the attorney, and the attorney does that.
Okay.
And of course they're insured and all that stuff, and so we use the term escrow because there's an escrow company involved, but buying a house, the process of from contract to closing is called the escrow period. Mm-hmm. And you're in escrow, and we have closed escrow when everything's done.
I like this. Always request that the seller pay the closing costs on your initial offer. Worst that can happen is they counter and say no.
This is true, but always check with your real estate professional, because the real estate market is so hot right now here in California, that an offer that you're going to be up against other offers always, and an offer that comes in asking for closing costs to be paid could be rejected in favor of an offer
of somebody who just does their shit. Yeah,
exactly.
Okay. Well,
but your real estate professional can tell you I know this house, I know they're willing to pay costs, yes, let's ask for it. Or
this is a comment from my wife. She says, if we have any rich relatives that want to do a good deed, holler, the 5-foot Viking, and I need a home. Dang, so many costs.
Yeah, right? I'll put that shout out to myself out there.
Yeah, we'll throw it. Yeah, we're gonna buy a house together. It's going down. And my good friend Kevin Hamill, guitar player extraordinaire, literally from it. If I'm not mistaken, Maine, like the furthest away from California where we can get. He's tuning in. It's got to be like 4:00 in the morning over there, buddy. What's up, Whit? Love the show. I want to fondle your escrow. Thank you, bro. I appreciate your input into the 5-foot Viking podcast. You are a gentleman and a scholar occasionally. So I think we touched base on escrow. We touched base on why escrow is necessary. Let's jump into the last one that I had a question about, and this is, what is homeowners insurance and HOA fees? And
Mhm.
the reason why I'm curious about this is because I'm one of those dudes that, like, I jump on like Zillow and Truly, like I have these apps and I
Mhm.
just kind of look around the areas and see. I'm curious what houses are going for. And then I'm that idiot that has the mortgage calculator right next to the regular calculator on my phone, and I plug it in and I'm like, oh, hey, this is only, $1,200 a month payments. I don't take into account all the factors that we just talked about. So,
Right, right.
but what are HOA fees? Why are some of them ridiculously high? And homeowners insurance, if you can expound on that.
Yeah. Well, an HOA fees you're only going to have if you buy a condo, a townhome, or something in a project that has common areas.
Mm-hmm.
The HOA fees are actually go to pay for that stuff. Go to pay for the common areas. If you buy a condo and the complex has a pool, those dues go to pay to maintain the pool, and whatever other common areas you have. You might have tennis courts. Um, you might have, or you might just have green belts, but you still need somebody to maintain those. Also, the project's going to have insurance to insure the buildings in case of fire, to insure liability insurance, a bunch of other coverages, and so that has to be paid for. So that's your HOA fee. Monthly HOA fee goes to pay for that.
So the
Okay,
more
everyone
amenities
pays
you
into that.
have in your complex or in your place, the higher it's going to be.
Exactly. So that's an indication. If you have
Mm.
a $400, $450 HOA fee as opposed to a $200, you're going to have bigger and nicer
You got a
amenities.
golf course versus
Exactly.
I have a
Exactly.
walkway.
If you're buying a regular home, there's no HOA.
Okay. So
Um,
HOAs are if you're getting a condo or a townhome and you
mhm.
have common areas where it be, swimming pool, tennis courts, golf course, things like that. So out in like Palm Springs or something like that, where you might get a condo on a golf course, your HOA fees are going to be much higher than if you get a condo or a townhome in Rancho Cucamonga and you have just a pool.
Exactly. Exactly.
Okay.
Um, Now, homeowners insurance, that's if you're buying a regular home, you have to get homeowners insurance. That
Hmm.
covers damage to the home by fire, um, and also covers liability if someone gets hurt on your property. There's a couple other things it covers as well. Those are the big two. It does not cover damage to your home in case of flood or earthquake. They're separate coverages you will need to buy if
We
you
have to
want to
get a
be covered.
separate we have to get a separate insurance for earthquake.
Yes, and it's really expensive. Most people don't have it.
Wow.
Yeah,
Okay, so
even though,
we
yeah,
so if I buy a house, I own my house, I have homeowners insurance. There's an earthquake and it messes up the foundation. I'm fucked, right?
you have to pay for it yourself. Yep.
Ouch. Okay.
Yeah, but it's so expensive. Most people don't have it, and
Hmm.
but I haven't heard of anybody um, that you know got that had that damage and kind of I'm sure it's happened, but I haven't heard of it in my career.
Hmm.
Um, So, but like either way, most people don't have their earthquake insurance.
So
I count
homeowners
on one
insurance.
hand in the last 10 years how many people bought home earthquake insurance.
Okay. And but you did say that homeowners insurance covers fire
Fire and liability.
and liability. Okay.
Yeah, those are the
So
big things that it covers. There's some other stuff too in there, and consult your homeowner's insurance professional for that.